Okay, let's break down the trades today. We took just based off MPOIs into the low time frame POI. So right here on the 4-hour time frame, let's jump on the 4-hour. What you could see is that price is bearish, forming new lows, new lower highs, new lows, and then from this point, price shot up and created a new high. That gave us indication that price has respected the buyers at this region. So here we had low, low, lower, high, high, low for potential new high. Price still respecting structure, lower, high, new low, low, and then a high. And then the price turned around and then broke into the upside. So seeing that, yeah, what we have is already right here is that break of structure confirmed of 1-2 points of structure that was broken. So I'm going to label it and put it up as a bullish break of structure. Now, this indicates that there was a lot of liquidity, or yes, a lot of buy side liquidity sitting at this region. And the high time frame always has more weight, but the lower time frame gives you more data that is to work with. So if I'm just going from the 4 hour to the 1 hour, you can already see on this specific region, and what I'm focusing on is this past price action. I'm not focusing on anything current. I'm looking at the past price action. And you can see right here, there's a slight imbalance, which is sitting there. And this imbalance hasn't been filled out. There's been a slight part of it that's been filled out, but majority of the imbalance is still there. So this is a higher time frame point of interest based off a transition. Price coming low, creating a lower high, just for a day, lower high, equal lows, lower high, lower low, and then a new high. That impulsive movement, breaking structure, leaving an imbalance was the clue that there was a trade available in this region. Now, all we waited for is price to come into that region on the lower time frame. So we'll see on the 5 minutes. Here we go. The 5 minutes here. What we could see is as price is approaching the buy region, price started slowing down. What's a lower low, lower high, lower low, some relatives, low low, again relatives, price is bouncing, and then dipped in. Lower high, lower low, spiked up. So there was a trading opportunity here, but price still dipped down below, and then gave this impulsive movement, breaking structure, leaving an imbalance, and that gave us an institutional trade. So I'm just going to take this box and change the color to a clear color, so we can actually have a look at this region here. And as price is pulling into this region, and we have this impulsive movement from this point upwards that breaks the structure, we have a trade set up in this specific zone. Now, how do we map that out? Firstly, is we find that imbalance, which was here. Sorry, firstly, you would find that indication of the break of structure, so that lower high was broken and there was new higher high formed. And then we're looking for that impulsive movement that's led to the break of structure that leaves an imbalance, because the candle below that, well, before that imbalance, is what we would call institutional orders or the order block, and that is where we're going to take our trade from. So using that the 5 minutes and integrating it with the 1 minute, you can then start refining the entry point. So I can now see that our impulsive movement to the upside, the imbalance actually started occurring from this point right here and then all the way up until that point there. And what happened with the progression to the downside is price started balancing out to this exact point right here. And the actual institutional order block or order flow orders was sitting right here. And this is where you want to get into your trade. Now, half a pip above the POI is where you want to take an entry. So let's just say 39 or 740, and then giving about 2 pips breathing room to the downside, and then at least that half a pip to the order block. You would get a 1 to 5 playing out. And this is a trade that I took myself. There's a screenshot also on the kind of mentorship charts. And you can see price first had to balance out, come to the institutional or just happened towards it and ran off. 90% I took off, and then I saw that there was also a minor break that happened here, minor low time frame break. And price had imbalance still, even here slightly below that price could go back into. So I left it to do that. And then as it spiked up, all that you could see is that there was a buildup of buy side liquidity that was sitting right here. So that means get out of the trade, close most of your positions, or just wait for the market to play with your plan, meaning take out at least a certain portion of your profit at the 1 to 5. So you're always taking profit. And then obviously with the buildup of liquidity, you could see prices most possibly probably going to take it out. And just bringing that last top of the iceberg, showing you everything was conferencing. We had the 50 level, price even reacted off the 50 level, even reacted off the 78 of the supported resistance zone for all of the retail traders trading retail methods, and entice most of them, just giving slight movements and then taking them out, or even anyone who was here with their stops, even below this point, had the anticipation that price is going to still blast up. So this is the trade from yesterday, and it was just a reaction of a specific point. And this is one of the trades you can take, and it was, again, as I said, a counter trend trade. So hope this breakdown was useful for you, and you could learn just in terms of the mindset, how to find your entries, how to understand the whole dynamic of taking an entry in the market. And this is basically what's left of. It's just the entry to the exit, and you gain your get your 1 to 5.